Hi, this is Lara at Elliott Wave Forex with your free US dollar index Elliott Wave analysis for the New York trading session dated Thursday the 2nd of September. I'm going to start off with a quick look at an historical chart. We're just going to go back 3 years. We had the end of a 5 waves down for a primary C to end a cycle degree wave B, 5 waves up at black or intermediate degree to end a primary 1, an A, B, C expanded flat correction for primary 2. According to this wave count, we're in a primary third wave to the upside within a cycle degree wave C. A long-term target for the end to cycle degree wave C may lie at 141.08. That's where it will reach 1.618, the length of cycle 1, which is further off to the left of the chart. A shorter term, but still a long-term target for the end to primary 3 may lie about 120.59, and that's where primary 3, which began down here, will reach 2.618, the length of primary 1. Up to that target, because this intermediate wave 1 is so long, I expect this whole primary third wave, which is going to subdivide at black or intermediate degree into a 1, 2, 3, 4, 5 wave impulsive structure, is probably going to get a little bit higher than just 1.618, the length of 1. Taking you now to a daily chart just for the last year, where this maroon 2 down here and this black 1 up here is this maroon 2 down here and this black 1 up here, and here's our 5 wave impulsive structure up for intermediate wave 1 with a really strong overshoot in the 5th wave position of this parallel channel that, apart from that, pretty much nicely contains this movement. A sharp little ABC zigzag down for intermediate wave 2. It is possible that we could see this as a 5 wave structure, just possible, and this could be the end of A for intermediate wave 2, and we've seen a B, and now we're working on a C to the downside. That is one other possibility. We'll know if price gets below 81.92. That's a requirement for that alternate interpretation, that alternate wave count that I just kind of outlined there for you. I don't think it's very likely though. I think that this intermediate wave 2 has taken enough time for it to be over here. It's also come to end very, very, very close to the 4th wave of 1 lesser degree, which is a really common turning point or ending point for correction. So I expect it was over here, and the subdivisions within it are pretty good. We've had a breakout of the little trend channel now, so this downwards momentum is over and we're in an upwards momentum. Within this blue or minor first wave to start intermediate wave 3, we've had minute or pink 1, 2, and within minute or pink 3 we've had a 1, 2, almost over here, about to start on the 3rd wave to the upside according to my wave count here. We can see some fairly interesting Fibonacci time relationships in this little piece of movement here. If we start with this bar here where I have the label pink 5, blue C and black 2, and count this bar as number 1, then this pink wave 1 is at 7 days, which is 1 short of a Fibonacci 8. This pink 2 is at 9 days, just 1 more than a Fibonacci 8. So far, nothing really special, not particularly convincing. But when we get up here, this green 1 is right on 13 days, the next Fibonacci number in the sequence. And green 2 so far is at 20 days, 1 more day, and it will be a Fibonacci 21. And my analysis of price of this downwards movement says we have just a little bit more to go, so it'll be really interesting to see if it does turn around after reaching a Fibonacci 21 days at my price target. Taking you now to an hourly chart where this green 2 and this green 1 is this green 2 and this green 1 up here, and here's our A, B, C correction to the downside for green 2, which is not quite over yet according to this wave count. This wave A, orange degree, looks most like a leading contracting diagonal, and everything's fine. This first wave, most likely an impulse, a zigzag for 2, an impulse, nice impulse for 3, a zigzag for 4, and an impulse to N5 with quite a nice overshoot of this lower trend line, this contracting trend line. Everything's fine. Wave 2 and wave 4 subdivide into zigzags as a leading diagonal must-have. But wave 3 is longer than wave 1, and if this is a contracting diagonal, then technically wave 3 should be shorter. But as I keep pointing out, that rule for wavelengths within diagonals probably should be rewritten in the book. I expect that wave 3 is still often the longest, even in a contracting diagonal. Wave 5 is shorter than 3 and 4 is shorter than 1, so within those other waves that rule is met. This wave B, orange, a regular flat correction with an A. B is a 93% correction of A, and wave C, longer than you would expect for a regular flat. It's 0.12 longer than equality with A, so not a perfect flat, but it's still a flat. Thereafter, this C wave, orange degree, subdividing quite nicely into a 1, an expanded flat for 2, a nice impulse for 3, 4 over here, probably a 1, 2, 3, 4, 5, a little bit further down to go. My target zone down here, 81.97, is where this wave 5 purple, which began here, will reach 0.618, the length of this wave 3 purple, and 81.83 is where wave C, which began here in its entirety, will reach 1.618, the length of wave A. So that's a nice, these figures are quite close together, so that's how I've worked out that little target zone, and we may take another day or so to get down there. This last piece of movement may take its time. So we will see if it takes a Fibonacci 21 days and hits that target zone. Wherever it does end up, it's most likely this is a little correction, and the next move up for the dollar should be some pretty strong upwards movement. That's all for me today with your dollar index analysis, and I hope everyone out there is looking forward to a fabulous weekend.